Question 1. Stakeholder feedback indicates that some Lithia Motors sales managers are pressuring accounting staff to accelerate revenue recognition for upcoming quarter-end sales to meet analyst expectations. What is the most appropriate and compliant course of action for the accounting department to take? Option A. Implement the requested revenue acceleration by recognizing sales that are not yet earned or are contingent on future events to meet immediate performance targets. Option B. Capitalize a portion of operating expenses that are typically expensed to artificially boost reported profits for the quarter. Option C. Omit disclosure of potential future warranty claims that could impact the company's profitability to present a more favorable financial picture. Option D. Accurately recognize revenue in accordance with generally accepted accounting principles, GAAP, and relevant SEC guidance, regardless of short-term performance pressures. The correct answer is D. Accurately recognize revenue in accordance with generally accepted accounting principles, GAAP, and relevant SEC guidance, regardless of short-term performance pressures. Explanation: Scenario analysis. This scenario presents a professional challenge because Lithia Motors, as a publicly traded company, is subject to stringent regulations regarding financial reporting and disclosure. Misrepresenting financial information, even with the intent to temporarily boost stock performance, can lead to severe legal and ethical repercussions, including SEC enforcement actions, shareholder lawsuits, and irreparable damage to the company's reputation and investor trust. The pressure to meet market expectations is a common challenge, but it must be navigated within the bounds of legal and ethical compliance. Correct approach analysis. The correct approach involves adhering strictly to generally accepted accounting principles, GAAP, and all relevant SEC regulations for financial reporting. This means accurately reflecting the company's financial performance and position, even if it means reporting less favorable results in the short term. This approach is justified by the fundamental ethical obligation of transparency and honesty in financial disclosures, as mandated by securities laws and professional accounting standards. It upholds the integrity of the financial markets and protects investors by providing them with reliable information for decision-making. Incorrect approaches analysis. Misrepresenting revenue by prematurely recognizing sales that have not yet been earned or are contingent on future events is a direct violation of GAAP, specifically revenue recognition principles. This constitutes accounting fraud and can lead to significant penalties from the SEC. Aggressively capitalizing operating expenses that should be expensed as incurred distorts the company's profitability and financial position. This violates the matching principle and the definition of an asset under GAAP, leading to an overstatement of assets and net income. Failing to disclose significant risks or contingent liabilities that could materially impact Lithia Motors' financial performance is a breach of disclosure requirements under SEC regulations. This deprives investors of crucial information needed to assess the company's true financial health and future prospects. Professional reasoning. Professionals at Lithia Motors should employ a decision-making process that prioritizes ethical conduct and regulatory compliance above short-term financial gains. This involves 1. Understanding and internalizing all applicable accounting standards, GAAP, and securities laws SEC regulations. 2. Seeking clarification from legal counsel or accounting experts when faced with ambiguous situations or pressure to manipulate financial results. 3. Maintaining a culture of integrity where employees feel empowered to report concerns without fear of reprisal. 4. Regularly reviewing internal controls and accounting policies to ensure ongoing compliance. Question 2. Strategic planning requires Lithia Motors to consider the regulatory implications of expanding into a new state. Which of the following approaches best ensures compliance with all applicable federal and state laws and guidelines for this expansion? Option A. Conduct a thorough review of all federal and state regulations relevant to automotive retail and financing in the target state, and integrate compliance measures into the expansion strategy from its inception. Option B. Delegate the responsibility for regulatory compliance to the local management team in the new state without centralized oversight. Option C. Prioritize rapid market entry and address any regulatory concerns that arise after the initial launch. Option D. Proceed with the expansion based on Lithia Motors' existing compliance protocols, assuming they are sufficient for the new market. The correct answer is A. Conduct a thorough review of all federal and state regulations relevant to automotive retail and financing in the target state, and integrate compliance measures into the expansion strategy from its inception. Explanation: this scenario is professionally challenging because Lithia Motors, as a publicly traded company, operates under strict regulatory oversight concerning financial reporting and disclosure. Ensuring compliance with these regulations is paramount to maintaining investor confidence, avoiding legal penalties, and upholding the company's reputation. The pressure to meet financial targets can create an environment where ethical boundaries are tested, requiring careful judgment and a robust understanding of compliance requirements. The correct approach involves proactively identifying and addressing potential compliance risks associated with new market entry. This means conducting thorough due diligence on the regulatory landscape of the target market, understanding all applicable laws and guidelines, and integrating these requirements into Lithia Motors' strategic plan from the outset. This approach aligns with the principles of regulatory compliance and ethical business conduct, ensuring that Lithia Motors operates legally and responsibly. Specifically, it adheres to the spirit and letter of U.S. federal securities laws, such as the Securities Act of 1933 and the Securities Exchange Act of 1934, which mandate accurate and complete disclosure of material information and prohibit fraudulent practices. It also reflects best practices in corporate governance and risk management, which are often reinforced by guidelines from bodies like the Securities and Exchange Commission, SEC. An incorrect approach that prioritizes speed to market over regulatory understanding would fail to adequately assess the legal and compliance implications of operating in a new jurisdiction. This could lead to inadvertent violations of local or federal laws, resulting in fines, sanctions, and reputational damage for Lithia Motors. Another incorrect approach, which involves assuming existing compliance frameworks are universally applicable without verification, ignores the nuances of different regulatory environments. This oversight can expose Lithia Motors to significant legal and financial risks. Finally, an approach that defers regulatory compliance to a later stage, after initial market entry, is inherently flawed. This reactive stance increases the likelihood of discovering noncompliance issues that are costly and difficult to rectify, potentially jeopardizing the entire venture and violating the principle of proactive compliance mandated by regulatory bodies. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the relevant regulatory environment. This involves identifying all applicable laws, regulations, and industry guidelines. Next, they should assess the potential impact of these requirements on Lithia Motors' proposed strategy, identifying any conflicts or gaps. The strategy should then be developed or adapted to ensure full compliance, with clear responsibilities assigned for ongoing monitoring and adherence. Regular review and updates to the compliance plan are essential as regulations evolve. Question 3. Strategic planning requires Lithia Motors to consider various approaches to financial reporting and operational oversight. Which of the following approaches best ensures compliance with relevant regulatory frameworks and ethical business practices? Option A. Prioritizing the establishment of robust internal controls, comprehensive employee training on compliance, and regular independent audits to ensure accurate financial reporting and operational integrity. Option B. Focusing primarily on achieving aggressive financial targets, with compliance measures being addressed only when specific issues arise or are flagged by external auditors. Option C. Implementing a minimal set of compliance policies that are documented but not actively enforced, relying on the assumption that employees will inherently act ethically. Option D. Delegating all compliance responsibilities to a single department without providing adequate resources or cross-functional integration, assuming they can manage all regulatory obligations independently. Correct answer is A. Prioritizing the establishment of robust internal controls, comprehensive employee training on compliance, and regular independent audits to ensure accurate financial reporting and operational integrity. Explanation: this scenario is professionally challenging because Lithia Motors, as a publicly traded company, operates under stringent regulatory oversight, particularly concerning financial reporting and disclosure. Ensuring compliance with these regulations is paramount to maintaining investor confidence, avoiding legal penalties, and upholding the company's reputation. The pressure to meet financial targets can create an environment where ethical boundaries might be tested, requiring careful judgment and a strong commitment to regulatory adherence. The correct approach involves proactively identifying and addressing potential compliance risks through robust internal controls and transparent communication. This demonstrates a commitment to regulatory frameworks and ethical business practices. Specifically, it requires Lithia Motors to implement and maintain effective internal controls over financial reporting, as mandated by regulations such as the Sarbanes-Oxley Act (SOX) in the United States. SOX Section 404, for instance, requires management and external auditors to report on the adequacy of the company's internal control over financial reporting. By prioritizing the establishment of clear policies, regular training for employees on compliance matters, and independent audits, Lithia Motors can mitigate risks and ensure accurate financial disclosures. This proactive stance aligns with the ethical duty to act with integrity and transparency, fostering trust among stakeholders and preventing potential legal repercussions. An incorrect approach that focuses solely on achieving short-term financial goals without adequate consideration for regulatory compliance is professionally unacceptable. This could manifest as overlooking or downplaying identified control deficiencies, or pressuring employees to manipulate financial data to meet targets. Such actions directly violate regulatory requirements and ethical principles. For example, intentionally misrepresenting financial performance or failing to disclose material information would constitute securities fraud, leading to severe penalties for both the company and individuals involved. Another incorrect approach might involve a superficial understanding of compliance, where policies are in place but not effectively implemented or enforced. This creates a false sense of security and leaves Lithia Motors vulnerable to non-compliance, as regulatory bodies expect demonstrable adherence, not just the existence of procedures. Professionals at Lithia Motors should employ a decision-making framework that integrates regulatory compliance and ethical considerations into all strategic planning processes. This involves a thorough risk assessment to identify potential areas of non-compliance, followed by the development and implementation of controls and procedures to mitigate those risks. Regular monitoring, auditing, and continuous improvement of compliance programs are essential. Furthermore, fostering a culture of ethical conduct and open communication, where employees feel empowered to report concerns without fear of retaliation, is critical for effective regulatory adherence and long-term business success. Question 4. Compliance review shows that a Lithia Motors sales associate is assisting a customer who is very interested in a pre-owned vehicle. The customer notices a mention of a vehicle history report and asks to see it. The associate retrieves the report, which indicates a minor accident that was repaired. The customer expresses excitement about the vehicle and seems eager to proceed with the purchase, glancing briefly at the report. What is the most appropriate action for the Lithia Motors sales associate to take? Option A. Briefly mention that there was a minor repair, but focus the conversation on the vehicle's positive features and the benefits of purchasing it today. Option B. Hand the vehicle history report to the customer and assume they will review it thoroughly on their own. Option C. Suggest that the vehicle history report is standard documentation and not particularly important for this vehicle, encouraging the customer to focus on the test drive. Option D. Proactively disclose the minor accident history, explain that it was repaired, and offer to walk the customer through the vehicle history report to ensure they understand all details. Correct answer is D. Proactively disclose the minor accident history, explain that it was repaired, and offer to walk the customer through the vehicle history report to ensure they understand all details. Explanation. This scenario presents a professional challenge because it requires an employee at Lithia Motors to navigate a situation where a potential customer's enthusiasm might lead them to overlook crucial information about a vehicle's history. Challenge lies in balancing the company's sales objectives with the ethical and regulatory obligation to provide accurate and complete information, ensuring the customer makes an informed decision. This requires careful judgment to avoid misleading the customer while still fostering a positive sales environment. The correct approach involves proactively disclosing the vehicle's accident history, even if it's minor, and providing the customer with the full vehicle history report. This aligns with the principles of transparency and fair dealing mandated by consumer protection laws and industry best practices. By offering the report and explaining the implications of the accident, the Lithia Motors representative upholds their duty to provide accurate information, allowing the customer to make a fully informed purchasing decision. This approach minimizes the risk of future disputes and reinforces Lithia Motors' commitment to ethical business conduct. An incorrect approach would be to downplay the accident or omit mentioning it, hoping the customer doesn't notice it on the report. This is a direct violation of the duty to disclose material information and could be considered deceptive practice under consumer protection regulations. Another incorrect approach would be to simply hand over the report without any explanation, assuming the customer will understand its significance. While not outright deception, this fails to actively ensure the customer is informed and could still lead to a misunderstanding or a perception of withholding information, potentially violating ethical standards of customer care. A third incorrect approach would be to focus solely on the positive aspects of the vehicle and avoid any discussion of the accident history, even when prompted by the customer's interest in the report. This is a form of omission that can be interpreted as an attempt to mislead. Professionals should employ a decision-making framework that prioritizes transparency and customer understanding. This involves actively seeking to inform the customer, providing all relevant documentation, and explaining its implications in a clear and understandable manner. When faced with potentially sensitive information, the focus should be on empowering the customer with knowledge rather than attempting to steer them towards a decision based on incomplete information. Question 5. Strategic planning requires Lithia Motors to implement new vehicle models that must comply with recently updated federal emission standards. The internal compliance team has identified ambiguity in the specific application of these standards to certain engine configurations, potentially impacting sales projections. Which of the following actions best demonstrates a commitment to regulatory compliance and responsible strategic planning for Lithia Motors? Option A. Proactively contact the Environmental Protection Agency, EPA, to seek official clarification on the interpretation of the new emission standards for the specific engine configurations. Option B. Rely exclusively on the interpretation provided by the dealership's legal counsel without direct consultation with the regulatory body. Option C. Proceed with the current interpretation of the emission standards, assuming the ambiguity will be clarified or enforcement will be lenient. Option D. Delay the launch of the new models until the ambiguity in the emission standards is fully resolved by the regulatory body, potentially impacting market entry timelines. The correct answer is C. Proceed with the current interpretation of the emission standards, assuming the ambiguity will be clarified or enforcement will be lenient. Explanation. This scenario presents a professional challenge for Lithia Motors' compliance team due to the inherent tension between business objectives and regulatory adherence. The pressure to meet sales targets can create an environment where shortcuts or misinterpretations of regulations might seem appealing, making robust internal controls and ethical decision-making paramount. Careful judgment is required to ensure that Lithia Motors operates within the bounds of the law and maintains its reputation. The correct approach involves proactively seeking clarification from the relevant regulatory body regarding the interpretation of the new emission standards. This demonstrates a commitment to compliance and a willingness to understand and implement the regulations correctly, specifically engaging with the Environmental Protection Agency, EPA, through their official channels for guidance on the application of the new emission standards to their specific vehicle models is the most responsible and legally sound action. This proactive stance prevents potential violations, avoids costly penalties, and ensures that Lithia Motors' strategic planning aligns with federal environmental law. An incorrect approach would be to proceed with the current understanding of the emission standards without seeking further clarification. This risks misinterpreting the regulations, leading to non-compliance and potential fines or sanctions from the EPA. Another incorrect approach would be to rely solely on the advice of external legal counsel without independently verifying the interpretation with the regulatory agency. While legal counsel is valuable, direct engagement with the EPA provides the definitive interpretation of their own regulations. Finally, adopting a wait-and-see attitude, hoping that the ambiguity will be resolved or that enforcement will be lenient, is a highly risky and unprofessional strategy that exposes Lithia Motors to significant legal and financial repercussions. Professionals should employ a decision-making framework that prioritizes understanding and adherence to regulations. This involves identifying potential compliance risks, actively seeking clarification from authoritative sources when ambiguity exists, documenting all communications and decisions related to compliance, and ensuring that strategic plans are developed with a thorough understanding of the legal and ethical landscape. Question 6. Quality control measures reveal that some Lithia Motors sales representatives are sharing customer contact information with third-party marketing firms without explicit customer consent, citing the need to meet aggressive quarterly sales targets. Which of the following represents the most appropriate response for Lithia Motors to ensure regulatory compliance and ethical conduct? Option A. Continue the practice of sharing customer contact information with third parties, but implement a disclaimer on customer forms stating that information may be shared for marketing purposes. Option B. Issue a company-wide memo reminding employees of general ethical principles regarding customer privacy and instruct them to use their best judgment when sharing information. Option C. Immediately cease all sharing of customer contact information with third parties and conduct a thorough review of Lithia Motors' data privacy policies and employee training programs to ensure alignment with all applicable federal and state privacy laws, such as the Gramm-Leach-Bliley Act. Option D. Focus solely on reinforcing sales targets and performance metrics, assuming that sales representatives are aware of and adhering to any necessary privacy protocols. The correct answer is C. Immediately cease all sharing of customer contact information with third parties and conduct a thorough review of Lithia Motors' data privacy policies and employee training programs to ensure alignment with all applicable federal and state privacy laws, such as the Gramm-Leach-Bliley Act. Explanation: this scenario presents a professional challenge because it requires Lithia Motors employees to navigate potential conflicts between business objectives and regulatory compliance, specifically concerning customer data privacy. The pressure to meet sales targets could inadvertently lead to practices that compromise the integrity of customer information, necessitating a robust understanding of applicable regulations. Careful judgment is required to ensure that customer trust and legal obligations are prioritized over short-term gains. The correct approach involves a proactive and comprehensive review of Lithia Motors' data handling policies and employee training programs. This ensures that all personnel are aware of and adhere to the specific requirements of the relevant regulatory framework, such as the Gramm-Leach-Bliley Act, GLBA, in the United States, which governs the privacy of financial information, including that of automotive customers. By implementing and consistently reinforcing these measures, Lithia Motors can mitigate risks, build customer confidence, and maintain its reputation as a responsible business. An incorrect approach of solely relying on general ethical guidelines without specific regulatory adherence fails to address the legally mandated obligations for customer data protection. This could lead to violations of privacy laws, resulting in significant fines and legal repercussions. Another incorrect approach, focusing only on sales performance without considering data privacy implications, demonstrates a disregard for regulatory requirements and customer trust, creating a direct pathway to noncompliance. Lastly, an approach that assumes existing practices are sufficient without independent verification overlooks the dynamic nature of regulations and the potential for evolving risks, leaving Lithia Motors vulnerable to unforeseen compliance issues. Professionals at Lithia Motors should employ a decision-making framework that begins with identifying all applicable regulations related to customer data. This should be followed by an assessment of current internal policies and procedures against these regulations. Where gaps exist, corrective actions, including policy updates and enhanced training, must be implemented. Regular audits and reviews are crucial to ensure ongoing compliance and to adapt to any changes in the regulatory landscape. Question 7. Strategic planning requires Lithia Motors to consider how its sales incentive programs might inadvertently encourage practices that could lead to misrepresentation of vehicle condition or service history to customers. Which of the following approaches best aligns with regulatory compliance and ethical business conduct for Lithia Motors? Option A. Focus sales incentive programs solely on meeting aggressive quarterly sales targets, with minimal emphasis on the methods used to achieve these targets, trusting that market forces will correct any improper behavior. Option B. Implement sales incentive programs that heavily favor the highest profit-generating sales and services, with the assumption that sales staff will naturally adhere to ethical standards without explicit oversight. Option C. Create sales incentive programs that reward the fastest completion of sales and service transactions, with a disclaimer that Lithia Motors is not responsible for the accuracy of information provided by sales staff. Option D. Design sales incentive programs that reward volume of sales and service appointments, with a clear policy that explicitly prohibits any form of misrepresentation and includes regular audits of sales and service records. Correct answer is D. Design sales incentive programs that reward volume of sales and service appointments, with a clear policy that explicitly prohibits any form of misrepresentation and includes regular audits of sales and service records. Explanation. This scenario presents a professional challenge because Lithia Motors, as a publicly traded company, is subject to stringent regulatory oversight regarding its financial reporting and disclosures. Ensuring compliance with these regulations is paramount to maintaining investor confidence, avoiding legal penalties, and upholding the company's reputation. The pressure to meet financial targets can create an environment where ethical boundaries might be tested, requiring careful judgment and a strong commitment to compliance. The correct approach involves proactively identifying potential compliance risks and implementing robust internal controls and reporting mechanisms. This demonstrates a commitment to regulatory adherence and ethical business practices. Specifically, it aligns with the principles of accurate financial disclosure and corporate governance mandated by regulatory bodies. By prioritizing transparency and adherence to established accounting principles, Lithia Motors safeguards itself against potential violations and fosters trust with stakeholders. An approach that prioritizes short-term financial gains over regulatory compliance is fundamentally flawed. This could manifest as aggressive accounting practices or the omission of material information, which directly contravenes regulations designed to ensure fair and transparent financial reporting. Such actions can lead to severe penalties, including fines, sanctions, and reputational damage, and may indicate a failure in corporate governance and ethical leadership. Another incorrect approach involves delegating compliance responsibilities without adequate oversight or training. This can result in unintentional errors or a lack of understanding of complex regulatory requirements, leaving the company vulnerable to noncompliance. Effective compliance requires a culture of awareness and accountability throughout the organization, with clear lines of responsibility and ongoing education. The professional decision-making process for similar situations should involve a thorough understanding of applicable regulations, a commitment to ethical conduct, and the establishment of strong internal controls. When faced with potential conflicts between financial performance and compliance, professionals should always err on the side of caution, seeking guidance from legal and compliance departments, and prioritizing long-term integrity over short-term expediency. This involves a systematic risk assessment, clear communication channels, and a willingness to escalate concerns when necessary. Question 8. Strategic planning requires Lithia Motors to consider how to best represent the condition of pre-owned vehicles to potential customers. Which of the following approaches best aligns with regulatory compliance and ethical sales practices when selling a used car with a known history of significant repairs? Option A. Prioritize meeting monthly sales quotas by providing only the information that facilitates a quick transaction, assuming the buyer will conduct their own thorough inspection. Option B. Focus on highlighting the vehicle's positive features and downplay any known issues to expedite the sale. Option C. Proactively disclose any known material defects or significant repair history of the vehicle to the potential buyer. Option D. Rely solely on a general as-is disclaimer to cover all potential vehicle issues without specific disclosure. The correct answer is C. Proactively disclose any known material defects or significant repair history of the vehicle to the potential buyer. Explanation. This scenario presents a professional challenge for Lithia Motors in navigating the complex landscape of consumer protection laws and ethical sales practices. The core difficulty lies in balancing aggressive sales targets with the imperative to provide accurate and transparent information to potential buyers, particularly concerning vehicle condition and potential repair history. A failure to do so can lead to significant legal repercussions, reputational damage, and erosion of customer trust. Careful judgment is required to ensure that all sales representations are truthful and not misleading, adhering strictly to the spirit and letter of applicable regulations. The correct approach involves proactively disclosing any known material defects or significant repair history of a used vehicle to a potential buyer at Lithia Motors. This aligns with the principles of fair dealing and transparency mandated by consumer protection laws, such as the Federal Trade Commission's (FTC) used car rule in the United States, which requires dealers to disclose known significant issues. Ethically, this approach upholds the duty of honesty and good faith towards customers, fostering a relationship built on trust. It also mitigates legal risk by preventing accusations of deceptive trade practices or misrepresentation. An incorrect approach that involves downplaying or omitting known issues with a vehicle to secure a sale is a direct violation of consumer protection statutes. Such actions can be construed as deceptive or unfair trade practices, leading to penalties, fines, and potential lawsuits. Ethically, this approach is fundamentally dishonest and exploitative, undermining the integrity of Lithia Motors and the automotive sales industry. Another incorrect approach, focusing solely on meeting sales quotas without regard for the accuracy of information provided about vehicle condition, demonstrates a disregard for regulatory compliance and ethical conduct. This prioritization of profit over truthfulness creates a high risk of legal entanglements and severe damage to the company's reputation. A third incorrect approach, assuming that a general, as-is disclaimer absolves Lithia Motors of all responsibility for disclosing known material defects, is a misinterpretation of legal requirements. While as-is sales have specific legal implications, they do not typically permit the concealment of known significant problems that would materially affect a buyer's decision. Professionals at Lithia Motors should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves a thorough understanding of all applicable consumer protection laws, internal company policies regarding disclosure, and a commitment to honest communication. When faced with a situation where a sale might be jeopardized by full disclosure, the professional reasoning process should involve asking, does this representation accurately reflect the vehicle's condition and history, and would a reasonable buyer consider this information important in their purchasing decision? If the answer to either part of this question is no, then the representation is likely problematic and requires correction or supplementation with full disclosure. Question 9. System analysis indicates that a Lithia Motors sales associate has access to customer purchase history and contact information. A colleague from a different department approaches the sales associate requesting this information to offer a special financing deal to the customer, which is not directly related to their recent vehicle purchase. What is the most appropriate and legally compliant course of action for the Lithia Motors sales associate? Option A. Share the information with the colleague, but instruct them to be discreet when contacting the customer. Option B. Forward the customer's information to the colleague, assuming that internal company requests are automatically approved under privacy regulations. Option C. Politely decline the request, explaining that customer information can only be used for purposes directly related to the vehicle sale or service, and suggest the colleague follow official internal channels for customer outreach if applicable and compliant with privacy policies. Option D. Provide the customer's contact information and purchase history to the colleague, as it is for an internal company offer. The correct answer is D. Provide the customer's contact information and purchase history to the colleague, as it is for an internal company offer. Explanation. Scenario analysis. This scenario presents a professional challenge for Lithia Motors employees regarding the ethical and regulatory handling of customer information. The core difficulty lies in balancing the company's need for sales data with the customer's right to privacy and the legal obligations surrounding data protection. Employees must exercise careful judgment to avoid unauthorized disclosure or misuse of sensitive personal information, which could lead to significant legal penalties, reputational damage, and erosion of customer trust. Correct approach analysis. The correct approach involves strictly adhering to Lithia Motors' established data privacy policies and relevant U.S. federal and state regulations, such as the California Consumer Privacy Act, CCPA, if applicable, or general principles of data protection. This means only accessing and using customer information for legitimate business purposes directly related to the sale or service of a vehicle, and never sharing it with third parties without explicit customer consent or a legal mandate. This approach is right because it upholds legal compliance, protects customer privacy, and maintains the company's ethical standing. Incorrect approach is analysis. Sharing customer contact information with a third-party marketing firm without explicit customer consent or a clear legal basis, is a direct violation of privacy laws and company policy. This constitutes a breach of trust and exposes Lithia Motors to potential lawsuits and regulatory fines. Using customer purchase history to solicit unrelated financial products from a different company, even if the intention is to offer a package deal, is an unauthorized use of personal data. Unless the customer has specifically opted into such cross-promotional activities, this action infringes on their privacy rights and likely violates data protection guidelines. Discussing a customer's vehicle purchase details with a colleague in a public area, such as the dealership's waiting room or a restaurant, constitutes an unauthorized disclosure of confidential information. This creates a risk of sensitive data falling into the wrong hands and undermines the company's commitment to customer confidentiality. Professional reasoning. Professionals at Lithia Motors should employ a decision-making framework that prioritizes data privacy and regulatory compliance. This involves 1. Understanding and internalizing Lithia Motors' data privacy policies and all applicable U.S. federal and state data protection laws. 2. Evaluating any request or proposed action involving customer data against these policies and laws. 3. Seeking clarification from supervisors or legal counsel if there is any ambiguity about the legitimacy or permissibility of accessing or sharing customer information. 4. Always erring on the side of caution to protect customer privacy and avoid potential legal repercussions. Question 10. Upon reviewing Lithia Motors' proposed social media campaign aimed at promoting year-end sales events, the marketing department has drafted several posts featuring attractive pricing and financing offers. Which of the following actions best ensures compliance with U.S. federal advertising regulations and ethical consumer protection standards? Option A. Immediately publish the social media posts to capitalize on the timely nature of the sales event, assuming that social media content is less scrutinized than traditional advertising. Option B. Submit all drafted social media posts to Lithia Motors' legal or compliance department for a thorough review to confirm accuracy, clarity, and adherence to all relevant advertising laws and FTC guidelines before publication. Option C. Rely on the marketing team's general understanding of advertising best practices and past campaign successes to ensure the posts are effective and compliant. Option D. Focus the social media posts on aspirational lifestyle imagery and general brand messaging, avoiding specific pricing or financing details to minimize the risk of regulatory scrutiny. The correct answer is A. Immediately publish the social media post to capitalize on the timely nature of the sales event, assuming that social media content is less scrutinized than traditional advertising. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire to promote its services and the regulatory obligation to ensure that all advertising and promotional materials are fair, accurate, and not misleading to consumers. Lithia Motors, like any automotive retailer, must navigate this balance carefully. The challenge lies in understanding the nuances of consumer protection laws and advertising standards that govern such communications. The correct approach involves ensuring that all marketing materials, including those used in social media campaigns, are reviewed by legal or compliance personnel to verify adherence to all applicable regulations. This proactive step is crucial because it establishes a robust internal control mechanism. Specifically, under U.S. consumer protection laws, such as those enforced by the Federal Trade Commission, FTC, advertising must be truthful and not deceptive. This includes ensuring that any claims made about vehicle pricing, financing offers, or vehicle condition are substantiated and clearly communicated, without omitting material information that could mislead a reasonable consumer. The ethical imperative is to foster trust with potential customers by providing transparent and accurate information. An incorrect approach would be to rely solely on the marketing team's understanding of advertising standards without independent legal or compliance review. This fails to acknowledge the complexity of regulatory requirements and the potential for unintentional misrepresentation. Such an approach risks violating consumer protection laws by allowing potentially misleading claims to be disseminated. Another incorrect approach is to assume that social media content is exempt from advertising regulations. This is a dangerous misconception, as regulatory bodies like the FTC have explicitly stated that endorsements and testimonials on social media must comply with advertising rules, including disclosure of material connections. Finally, an approach that prioritizes speed and volume of content over accuracy and compliance would be ethically and legally unsound, potentially leading to significant penalties and reputational damage for Lithia Motors. Professionals should employ a decision-making framework that prioritizes regulatory adherence and ethical conduct. This involves 1. Identifying all applicable regulations and guidelines relevant to the communication channel, e.g., FTC guidelines for advertising, state-specific consumer protection laws. 2. Establishing clear internal policies and procedures for content review and approval, involving legal and compliance expertise. 3. Training all relevant personnel on these policies and regulations. 4. Regularly auditing marketing materials and campaigns to ensure ongoing compliance. 5. Fostering a culture where compliance is seen as a shared responsibility, not just a legal department function. Question 11. The risk matrix shows a significant control deficiency related to revenue recognition processes at Lithia Motors, potentially impacting the accuracy of reported sales figures for the upcoming quarterly earnings release. Which of the following actions best aligns with regulatory compliance and ethical financial reporting standards for Lithia Motors? Option A. Proceed with issuing the quarterly financial statements as scheduled, assuming the impact is immaterial, and address the control deficiency in subsequent periods. Option B. Immediately halt the financial statement issuance process to conduct a comprehensive investigation into the control deficiency, determine its impact, and implement corrective actions before releasing the statements. Option C. Inform the audit committee of the deficiency but proceed with issuing the financial statements, relying on the external auditors to identify and rectify any material misstatements during their audit. Option D. Disclose the control deficiency in a footnote to the financial statement but still proceed with the scheduled release, without a full investigation or remediation plan in place. The correct answer is A. Proceed with issuing the quarterly financial statements as scheduled, assuming the impact is immaterial, and address the control deficiency in subsequent periods. Explanation. This scenario is professionally challenging because Lithia Motors, as a publicly traded company, operates under strict regulatory oversight, particularly concerning financial reporting and disclosure. The risk matrix highlights a potential deficiency in internal controls that could lead to material misstatements in financial reports, which carries significant legal and reputational consequences. The challenge lies in balancing the need for timely financial reporting with the imperative of ensuring accuracy and compliance. The correct approach involves a thorough investigation and remediation of the identified control deficiency. This demonstrates a commitment to robust internal controls and accurate financial reporting, aligning with the principles of the Sarbanes-Oxley Act (SOX) in the United States, which mandates management's responsibility for establishing and maintaining adequate internal control over financial reporting. Specifically, Section 404 of SOX requires management to assess and report on the effectiveness of these controls. By proactively addressing the deficiency, Lithia Motors upholds its legal and ethical obligations to shareholders and regulatory bodies like the Securities and Exchange Commission, SEC. An incorrect approach of immediately issuing the financial statements without addressing the control weakness would be a severe regulatory and ethical failure. This action would violate SOX requirements by failing to ensure the accuracy of financial reporting and potentially misleading investors. Another incorrect approach of downplaying the significance of the deficiency to avoid delays would also be a failure, as it disregards the potential for material misstatement and the obligation to disclose such issues transparently. Finally, an approach of solely relying on external auditors to identify and fix the problem, rather than taking internal ownership, neglects management's primary responsibility under SOX for establishing and maintaining effective internal controls. Professionals should adopt a decision-making framework that prioritizes compliance and accuracy. This involves 1. Recognizing and assessing the risk presented by the control deficiency. 2. Initiating a prompt and thorough investigation to understand the root cause and potential impact. 3. Developing and implementing a remediation plan. 4. Testing the effectiveness of the remediation. 5. Communicating findings and actions to relevant stakeholders, including senior management and the audit committee, in accordance with regulatory requirements. Question 12. The efficiency study reveals that several key operational processes at Lithia Motors are not performing as expected, leading to increased costs and potential delays in service delivery. Management is considering how to address these findings in light of their responsibilities under U.S. securities regulations. Which of the following actions best aligns with regulatory compliance and professional ethics for Lithia Motors? Option A. Conduct a detailed assessment to determine if these operational inefficiencies have a material impact on Lithia Motors' financial statements and internal controls over financial reporting, and if so, develop and disclose a remediation plan. Option B. Implement immediate, minor adjustments to the identified processes to show progress, without a full investigation into the financial reporting implications. Option C. Focus solely on improving operational efficiency to reduce costs, assuming that financial reporting will naturally improve as a result. Option D. Keep the findings confidential within the operational departments to avoid any potential negative impact on Lithia Motors' stock price or investor confidence. The correct answer is A. Conduct a detailed assessment to determine if these operational inefficiencies have a material impact on Lithia Motors' financial statements and internal controls over financial reporting, and if so, develop and disclose a remediation plan. Explanation. This scenario presents a professional challenge because Lithia Motors, as a publicly traded company, is subject to stringent regulatory oversight regarding its financial reporting and internal controls. The efficiency study's findings, if not handled appropriately, could indicate potential misstatements or control deficiencies that require timely and accurate disclosure. The challenge lies in balancing the need for internal operational improvement with the legal and ethical obligations to maintain accurate financial records and inform stakeholders appropriately. Careful judgment is required to determine the scope of the issue, the necessary corrective actions, and the appropriate communication channels. The correct approach involves a thorough investigation to understand the root cause and financial impact of the identified inefficiencies. This includes assessing whether these inefficiencies constitute a material weakness or significant deficiency in internal controls over financial reporting, as defined by relevant U.S. regulations such as the Sarbanes-Oxley Act (SOX). If a material weakness is identified, Lithia Motors has a legal obligation to disclose this in its SEC filings, along with a plan to remediate it. This approach ensures compliance with SOX, promotes transparency with investors, and upholds the integrity of financial reporting. An incorrect approach would be to dismiss the findings as purely operational issues without considering their potential financial reporting implications. This failure to investigate the financial impact could lead to non-compliance with SOX, specifically Section 302 and 404, which mandate management's responsibility for establishing and maintaining adequate internal controls and disclosing any material weaknesses. Another incorrect approach would be to attempt to conceal or downplay the findings to avoid negative publicity or investor reaction. This constitutes a breach of ethical duties and potentially violates securities laws by misrepresenting the company's financial health and control environment. A third incorrect approach would be to implement superficial fixes without addressing the underlying systemic issues, which would fail to remediate any control deficiencies and could lead to recurring problems and continued noncompliance. Professionals should employ a structured decision-making process that begins with a comprehensive risk assessment. This involves understanding the nature of the inefficiency, its potential impact on financial statements, and the likelihood of recurrence. If the risk assessment indicates a potential material impact or control deficiency, the next step is to engage relevant internal stakeholders, such as the Internal Audit Department and legal counsel, to conduct a thorough investigation. Based on the findings, a determination should be made regarding disclosure obligations under SEC rules and SOX. Remediation plans should be developed and implemented, with ongoing monitoring to ensure effectiveness. Transparency and timely communication with the Audit Committee of the Board of Directors are crucial throughout this process. Question 13. Examination of the data shows that a Lithia Motors sales associate is preparing to finalize a vehicle sale. The associate has verbally informed the customer about the vehicle's general condition, but has not provided a written copy of the vehicle's history report or a detailed breakdown of any potential upcoming maintenance costs, as these were not explicitly requested by the customer. Which of the following represents the most compliant and ethically sound approach for the Lithia Motors sales associate in this situation? Option A. Assume that the customer is aware of general vehicle maintenance expectations and that the absence of a specific request for the history report implies they are not interested in it. Option B. Pause the sale and provide the customer with a written copy of the vehicle's history report and a clear explanation of any anticipated significant upcoming maintenance costs before finalizing any paperwork. Option C. Proceed with the sale, as the customer did not specifically ask for the history report or detailed maintenance costs, and verbal assurances were given. Option D. Inform the customer that providing such detailed documentation is not standard practice unless specifically mandated by law for that particular vehicle type. The correct answer is C. Proceed with the sale, as the customer did not specifically ask for the history report or detailed maintenance costs, and verbal assurances were given. Explanation. This scenario presents a professional challenge for Lithia Motors employees due to the inherent conflict between business objectives and regulatory compliance. The pressure to meet sales targets can inadvertently lead to overlooking or downplaying critical disclosures, which is a direct violation of consumer protection laws and ethical business practices. Careful judgment is required to balance the need for sales with the absolute necessity of adhering to all applicable regulations. The correct approach involves proactively identifying and addressing potential compliance gaps before they manifest as violations. This means understanding the specific disclosure requirements mandated by relevant U.S. consumer protection laws, such as those enforced by the Federal Trade Commission, FTC, and state-specific regulations governing automotive sales. Lithia Motors employees must be trained to recognize when information is material to a consumer's purchasing decision and ensure it is communicated clearly and conspicuously. This proactive stance, prioritizing transparency and accurate representation, aligns with the spirit and letter of consumer protection laws, fostering trust and avoiding legal repercussions. An incorrect approach of assuming that verbal assurances are sufficient without written disclosure fails to meet the legal standard for transparency. Many consumer protection laws require certain disclosures to be in writing and readily accessible to the consumer. Another incorrect approach, that of only disclosing information when directly asked by a customer, is also a failure. Regulations often mandate proactive disclosure of material information, regardless of whether the customer inquires. This shifts the burden of information gathering onto the consumer, which is contrary to consumer protection principles. Finally, an approach that prioritizes closing a sale over ensuring full disclosure, even if the undisclosed information is not explicitly requested, represents a significant ethical and regulatory failure. This demonstrates a disregard for the consumer's right to make an informed decision and exposes Lithia Motors to potential penalties and reputational damage. Professionals at Lithia Motors should employ a decision-making framework that begins with a thorough understanding of all applicable disclosure requirements. This should be followed by a systematic review of sales processes to identify any points where disclosures might be missed or inadequately communicated. Training and ongoing education on regulatory updates are crucial. When faced with a situation where a disclosure might be overlooked, the professional decision-making process should involve pausing the transaction, consulting internal compliance resources or legal counsel if necessary, and ensuring all required information is provided accurately and transparently before proceeding. The ultimate goal is to ensure that every customer transaction is compliant and ethically sound, safeguarding both the consumer and the company. Question 14. Assessment of how Lithia Motors employees should respond to a suspected internal data security incident where customer personal information may have been accessed without authorization, considering the need for prompt action and regulatory compliance. Option A. Immediately initiate a comprehensive internal investigation. Assess the scope of the potential breach, and prepare to notify affected customers and relevant regulatory bodies as required by law, while also implementing immediate security enhancements. Option B. Address the technical vulnerability that allowed the suspected access and assume that customer data was not compromised unless direct evidence of misuse emerges later. Option C. Wait for definitive proof of unauthorized access and customer impact before taking any external action, focusing only on internal technical fixes to prevent further access. Option D. Inform a select group of senior management and legal counsel about the incident, but refrain from notifying customers or external authorities until the full extent of the breach is determined, which could take an extended period. The correct answer is A. Immediately initiate a comprehensive internal investigation. assess the scope of the potential breach, and prepare to notify affected customers and relevant regulatory bodies as required by law, while also implementing immediate security enhancements. Explanation: this scenario presents a professional challenge for Lithia Motors employees regarding the ethical and regulatory handling of customer information, specifically in the context of potential data breaches or unauthorized access. The core difficulty lies in balancing the company's operational needs with the stringent privacy obligations mandated by relevant regulations. Employees must exercise careful judgment to ensure compliance and maintain customer trust. The correct approach involves a proactive and transparent communication strategy with affected customers, coupled with a thorough internal investigation and remediation process. This aligns with regulatory requirements that often mandate timely notification of data breaches to individuals whose information may have been compromised. Such transparency demonstrates a commitment to customer privacy and helps mitigate potential harm. Furthermore, it allows customers to take necessary steps to protect themselves, such as monitoring their financial accounts. This approach is ethically sound as it respects individual autonomy and the right to be informed about potential risks to personal data. An incorrect approach that involves delaying or omitting notification to customers, even if the extent of the breach is initially unclear, poses significant regulatory and ethical risks. This failure to inform could violate data privacy laws, leading to substantial fines and reputational damage for Lithia Motors. Ethically, it erodes customer trust and can leave individuals vulnerable to identity theft or financial fraud without their knowledge. Another incorrect approach, such as attempting to downplay the severity of the incident internally without proper assessment or external reporting, is also professionally unacceptable. This can lead to inadequate security measures being implemented, leaving the company and its customers exposed to further risks. It also suggests a disregard for the seriousness of data protection and regulatory compliance. Finally, an approach that focuses solely on technical fixes without addressing the communication and notification aspects fails to meet the comprehensive requirements of data protection regulations. While technical remediation is crucial, it does not absolve the company of its duty to inform affected individuals. Professionals at Lithia Motors should employ a decision-making framework that prioritizes regulatory compliance and ethical conduct. This involves 1. Immediately assessing the potential scope and impact of any suspected data incident. 2. Consulting with legal and compliance teams to understand specific notification obligations under applicable laws. 3. Developing a clear and timely communication plan for affected customers. 4. Implementing robust internal controls and security enhancements to prevent future incidents. 5. Documenting all actions taken throughout the process. This systematic approach ensures that all regulatory and ethical obligations are met, safeguarding both the company and its customers. Question 15. Which approach would be most appropriate for a Lithia Motors finance team member when preparing quarterly financial reports, considering the need for accuracy and compliance with U.S. Generally Accepted Accounting Principles (GAAP) and Securities and Exchange Commission (SEC) guidelines? Option A. Delay the recording of all known expenses until the following quarter to improve the current quarter's reported profit margin. Option B. Focus solely on reporting the most favorable financial metrics to investors, even if it requires interpreting accounting rules in a way that presents the company in the best possible light, without explicit regard for strict GAAP or SEC disclosure requirements. Option C. Accurately record all revenue when earned and realized, and ensure all expenses are recognized in the period they are incurred, adhering strictly to GAAP revenue recognition and expense matching principles, and providing full disclosure of all material information as required by the SEC. Option D. Recognize revenue for vehicle sales and service contracts as soon as a purchase agreement is signed, regardless of whether the vehicle has been delivered or the service has been performed. The correct answer is D. Recognize revenue for vehicle sales and service contracts as soon as a purchase agreement is signed, regardless of whether the vehicle has been delivered or the service has been performed. Explanation: this scenario presents a professional challenge because Lithia Motors, as a publicly traded company, is subject to strict regulations regarding financial reporting and disclosure. Employees are expected to uphold the integrity of financial information. The challenge lies in balancing the desire to present a positive financial outlook with the absolute requirement for accuracy and compliance with accounting principles and securities laws. Misrepresenting financial data, even with the intention of improving short-term performance, can lead to severe legal and reputational consequences for both the individuals involved and the company. The correct approach involves diligently adhering to generally accepted accounting principles, GAAP, and all applicable securities regulations. This means ensuring that all financial transactions are recorded accurately, that revenue recognition policies are applied correctly, and that any potential liabilities or contingencies are appropriately disclosed. This approach is ethically sound and legally mandated, as it prioritizes transparency and investor protection. By following GAAP and regulatory guidelines, Lithia Motors demonstrates a commitment to responsible corporate governance and maintains the trust of its shareholders and the market. An incorrect approach that involves prematurely recognizing revenue for services not yet fully rendered or for which payment is not yet assured would be a direct violation of GAAP, specifically revenue recognition principles. This misrepresentation inflates current earnings and creates a false impression of the company's financial health, potentially misleading investors. Another incorrect approach, such as intentionally delaying the recording of known expenses or liabilities, would also violate GAAP and securities laws by understating expenses and overstating profits. This constitutes accounting fraud. Finally, an approach that involves selectively disclosing positive financial information while withholding negative but material information would violate disclosure requirements under securities laws, leading to accusations of market manipulation and a breach of fiduciary duty. Professionals at Lithia Motors should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance above all else. This involves seeking clarification from accounting and legal departments when unsure about the proper treatment of a transaction, resisting pressure to manipulate financial results, and maintaining accurate and complete financial records. A commitment to continuous learning about relevant accounting standards and regulatory updates is also crucial. Question 16. Implementation of a robust data privacy policy at Lithia Motors is crucial. If a cybersecurity incident results in the unauthorized access or acquisition of customer personal information, what is the most appropriate and legally compliant course of action for Lithia Motors to take regarding customer notification? Option A. Immediately notify all affected customers in writing, detailing the nature of the incident, the types of information involved, and steps they can take to protect themselves, in accordance with applicable U.S. federal and state data breach notification laws. Option B. Only notify customers if they explicitly inquire about the security of their data to avoid unnecessary alarm and administrative burden. Option C. Wait to notify customers until a full internal investigation is complete, which may take several weeks, to ensure all details are accurate and to avoid premature panic. Option D. Provide a general announcement on the Lithia Motors website without directly contacting affected individuals, stating that a security incident may have occurred but without specific details. The correct answer is A. Immediately notify all affected customers in writing, detailing the nature of the incident, the types of information involved, and steps they can take to protect themselves, in accordance with applicable U.S. federal and state data breach notification laws. Explanation. This scenario presents a professional challenge for Lithia Motors employees regarding the ethical and regulatory handling of customer information, specifically in the context of potential data breaches or unauthorized access. The core difficulty lies in balancing the company's operational needs with the stringent privacy obligations mandated by U.S. federal and state laws, such as the Gramm-Leach-Bliley Act, GLBA, and various state data breach notification laws. Employees must exercise careful judgment to ensure that all data handling practices are compliant and protect customer trust. The correct approach involves a proactive and transparent communication strategy with affected customers following a confirmed data security incident. This demonstrates Lithia Motors' commitment to customer privacy and regulatory compliance. Specifically, promptly notifying affected individuals, as required by law, allows them to take protective measures and mitigates potential harm. This aligns with the principles of consumer protection and the legal obligations to inform individuals when their personal information may have been compromised. An incorrect approach would be to delay or withhold notification to customers. This failure to inform customers promptly constitutes a violation of data breach notification laws, which typically mandates specific timeframes for such communications. It also erodes customer trust and can lead to significant legal penalties, regulatory scrutiny, and reputational damage for Lithia Motors. Another incorrect approach would be to provide vague or misleading information about the incident. This misrepresents the situation to customers and fails to equip them with the necessary details to protect themselves, thereby violating ethical obligations and potentially legal requirements for clear and accurate communication. Professionals at Lithia Motors should employ a decision-making framework that prioritizes regulatory adherence and ethical conduct. This involves understanding the company's data privacy policies, relevant U.S. federal and state laws, and establishing clear protocols for incident response. When a potential breach occurs, the framework should guide immediate assessment, consultation with legal and compliance teams, and the swift implementation of legally mandated notification procedures, ensuring transparency and customer protection. Question 17. Strategic planning requires Lithia Motors to consider its expansion into new markets. Which of the following approaches best ensures compliance with federal advertising and consumer protection regulations during this expansion? Option A. Proceeding with market expansion and addressing any potential regulatory concerns that arise after advertising campaigns have been launched. Option B. Implementing comprehensive compliance training for all sales and marketing staff, coupled with a pre-approval process for all advertising materials to ensure adherence to FTC guidelines and relevant consumer protection laws. Option C. Focusing solely on sales volume and market share growth, assuming that regulatory compliance will be handled by legal counsel on an as-needed basis. Option D. Relying on individual sales representatives to interpret and apply advertising regulations as they see fit, with minimal oversight. The correct answer is B. Implementing comprehensive compliance training for all sales and marketing staff, coupled with a pre-approval process for all advertising materials to ensure adherence to FTC guidelines and relevant consumer protection laws. Explanation. This scenario presents a professional challenge for Lithia Motors' compliance team by requiring them to navigate potential conflicts between business objectives and regulatory adherence. The core difficulty lies in balancing the desire for aggressive market expansion with the imperative to comply with all applicable consumer protection laws and advertising standards. Careful judgment is essential to ensure that Lithia Motors' growth strategies do not inadvertently lead to deceptive practices or violations of federal regulations governing automotive sales and advertising. The correct approach involves proactively developing and implementing robust internal policies and training programs that align Lithia Motors' marketing and sales activities with all relevant federal regulations, particularly those concerning advertising disclosures and consumer rights. This proactive stance ensures that Lithia Motors operates ethically and legally, mitigating the risk of fines, reputational damage, and loss of consumer trust. Specific regulatory justification stems from the Federal Trade Commission's (FTC) authority to enforce laws against unfair or deceptive acts or practices in commerce, including advertising. Adherence to the Truth in Lending Act (TILA) and the Consumer Leasing Act (CLA) is also paramount in ensuring accurate disclosure of financing and leasing terms. An incorrect approach of prioritizing rapid market expansion without adequate regulatory review would fail to uphold Lithia Motors' legal obligations. This could lead to violations of advertising regulations by omitting crucial disclosures about vehicle pricing, financing terms, or warranty information, thereby engaging in deceptive practices. Another incorrect approach, focusing solely on sales targets without integrating compliance checks, would similarly expose Lithia Motors to regulatory scrutiny. This disregard for compliance could result in penalties for misrepresenting vehicle condition, mileage, or financing options, directly contravening FTC guidelines and consumer protection statutes. A third incorrect approach, relying on ad hoc legal advice only when issues arise, is reactive and inefficient, increasing the likelihood of past violations and significant remediation costs. This reactive posture fails to establish a culture of compliance and can lead to systemic issues. Professionals should employ a decision-making framework that prioritizes a thorough understanding of applicable regulations before launching new initiatives. This involves establishing clear compliance protocols, conducting regular internal audits, and providing ongoing training to all relevant personnel. When faced with strategic decisions, The framework should include a mandatory compliance review stage to identify and address potential regulatory risks before implementation. Question 18. During the evaluation of a new sales incentive program at Lithia Motors, a sales manager realizes they have recently invested in a company that manufactures a key component used in a significant portion of the vehicle's Lithia Motors cells. What is the most appropriate course of action for the sales manager to ensure compliance and uphold ethical standards? Option A. Assume the investment does not create a conflict of interest as long as their decision-making regarding the incentive program remains objective. Option B. Wait to see if any questions arise about their involvement in the incentive program before mentioning the investment. Option C. Immediately disclose the personal investment to their direct supervisor and the compliance department, outlining the nature of the investment and its potential relevance to their role. Option D. Disclose the investment only if the incentive program directly impacts the sales volume of the specific vehicles that use the component they have invested in. The correct answer is C. Immediately disclose the personal investment to their direct supervisor and the compliance department, outlining the nature of the investment and its potential relevance to their role. Explanation. This scenario presents a professional challenge because it requires an employee at Lithia Motors to navigate potential conflicts of interest and ensure compliance with internal policies and relevant regulations concerning the disclosure of personal financial interests that could impact their professional duties. The core of the challenge lies in balancing personal financial activities with the obligation to act in the best interest of Lithia Motors and its customers, while adhering to ethical standards and any applicable disclosure requirements. Careful judgment is needed to determine when a personal financial interest crosses the line into a reportable conflict. The correct approach involves proactively identifying and disclosing any personal financial interests that could reasonably be perceived as creating a conflict of interest with their role at Lithia Motors. This demonstrates integrity, transparency, and a commitment to upholding ethical standards. Specifically, it aligns with the principle of avoiding situations where personal gain might influence professional judgment or decision-making, which is a fundamental tenet of corporate governance and employee conduct. Such disclosure allows Lithia Motors to assess the situation, implement appropriate safeguards, or manage the conflict effectively, thereby protecting the company and its stakeholders. An incorrect approach of assuming no conflict exists without proper review is a failure to exercise due diligence and adhere to ethical obligations. This can lead to undisclosed conflicts of interest, potentially resulting in biased decision-making, reputational damage to Lithia Motors, and violations of internal policies or regulatory guidelines that mandate disclosure of such situations. Another incorrect approach of waiting for a direct request for information before disclosing a potential conflict is reactive rather than proactive. This delays the identification and management of risks, potentially allowing a conflict to influence actions before it is addressed. It also suggests a lack of commitment to transparency and may be viewed as an attempt to conceal a situation. Finally, an incorrect approach of disclosing only after a problem has arisen is a significant ethical and professional lapse. This indicates a failure to understand or prioritize compliance and ethical conduct, and it exposes Lithia Motors to greater risk. It suggests a disregard for preventative measures and a reactive stance towards potential misconduct. Professionals should employ a decision-making framework that prioritizes proactive identification and disclosure of potential conflicts of interest. This involves understanding company policies on conflicts of interest, being aware of any relevant industry regulations, and exercising sound judgment to assess whether personal financial interests could reasonably influence professional responsibilities. When in doubt, err on the side of disclosure and seek guidance from management or the compliance department. Question 19. The control framework reveals that a customer has lodged a complaint with a Lithia Motors dealership regarding a recent service. Which of the following actions by the Lithia Motors employee handling the complaint best adheres to regulatory compliance and internal reporting guidelines? Option A. Recording only the customer's name and a general statement that a complaint was received. Option B. Summarizing the complaint in a way that minimizes the severity of the customer's concerns and omitting specific details. Option C. Documenting the complaint with the date, time, customer's name, a brief summary of the issue, and the names of Lithia Motors personnel involved. Option D. Not recording the names of Lithia Motors personnel who interacted with the customer during the service or complaint process. Correct answer is C. Documenting the complaint with the date, time, customer's name, a brief summary of the issue, and the names of Lithia Motors personnel involved. Explanation. Scenario analysis. This scenario presents a professional challenge for Lithia Motors employees regarding the accurate and timely reporting of customer complaints. The difficulty lies in balancing the need for thorough documentation with the potential for perceived pressure to minimize negative feedback. Employees must exercise sound judgment to ensure all relevant information is captured without misrepresenting the situation or violating reporting protocols. The potential for reputational damage and regulatory scrutiny makes accurate reporting paramount. Correct approach analysis. The correct approach involves diligently documenting all aspects of the customer complaint, including the date, time, customer details, nature of the complaint, any immediate actions taken, and the names of involved Lithia Motors personnel. This aligns with regulatory requirements for maintaining accurate customer records and demonstrating a commitment to customer service and complaint resolution. Such comprehensive documentation provides a clear audit trail, supports internal investigations, and ensures transparency with regulatory bodies if required. It reflects a commitment to ethical business practices and adherence to internal control frameworks designed to manage risk and ensure customer satisfaction. Incorrect approach is analysis. Failing to document the specific details of the complaint, such as the date and time, represents a significant regulatory and ethical failure. This omission hinders any subsequent investigation, makes it difficult to track complaint trends, and can be interpreted as an attempt to obscure or downplay the issue. It violates the principle of accurate record keeping, which is fundamental to regulatory compliance and good business practice. Summarizing the complaint without including the customer's specific concerns or the actions taken by Lithia Motors personnel is also a failure. Superficial reporting does not provide actionable information for management or regulatory oversight. It suggests a lack of diligence and an attempt to present a less critical picture than reality, which is ethically questionable and can lead to regulatory noncompliance if a pattern of such reporting emerges. Omitting the names of Lithia Motors personnel involved in the interaction or resolution process is another critical failure. This lack of accountability makes it impossible to identify individuals for follow-up, training, or disciplinary action if necessary. It undermines internal control mechanisms and can create an environment where issues are not adequately addressed at the individual level, potentially leading to repeated problems and regulatory noncompliance. Professional reasoning. Professionals at Lithia Motors should approach customer complaint reporting with a mindset of complete transparency and accuracy. The decision-making process should prioritize adherence to established internal policies and any applicable regulatory guidelines for customer interaction and complaint handling. When faced with a complaint, the immediate step should be to listen attentively, gather all relevant facts, and document them meticulously. If there is any ambiguity or concern about the reporting process, employees should consult their direct supervisor or the designated compliance officer for clarification. The overarching principle is to ensure that all reporting is truthful, complete, and supports the company's commitment to ethical operations and customer welfare. Question 20. Performance analysis shows that Lithia Motors' quarterly financial results are trending below analyst expectations, potentially impacting investor confidence and stock valuation. Which of the following actions best aligns with regulatory compliance and ethical financial reporting standards for a publicly traded company? Option A. Accurately report financial results according to generally accepted accounting principles, GAAP, and provide transparent disclosures regarding performance, even if it falls short of expectations. Option B. Downplay or omit negative operational trends in public statements and investor communications to maintain a positive market perception. Option C. Accelerate the recognition of revenue for services that are contracted but not yet fully delivered to meet or exceed projected earnings. Option D. Capitalize certain operating expenses that are typically expensed immediately, thereby reducing current period expenses and increasing reported profit. The correct answer is C. Accelerate the recognition of revenue for services that are contracted but not yet fully delivered to meet or exceed projected earnings. Explanation. This scenario presents a professional challenge because Lithia Motors, as a publicly traded company, is subject to stringent federal securities laws and regulations designed to ensure fair and transparent financial reporting. The pressure to meet or exceed analyst expectations, while a common business objective, must be balanced against the absolute requirement to adhere to generally accepted accounting principles, GAAP, and SEC disclosure rules. Misrepresenting financial performance, even with the intention of boosting stock price or investor confidence, can lead to severe legal penalties, reputational damage, and loss of investor trust. Careful judgment is required to distinguish between legitimate business strategies for growth and unethical or illegal accounting practices. The correct approach involves a commitment to accurate and transparent financial reporting, even when the results are not as favorable as anticipated. This means adhering strictly to GAAP in recognizing revenue and expenses, and providing full and fair disclosure of all material information in SEC filings. If performance falls short of expectations, the company must disclose this reality truthfully, explaining the reasons and outlining a realistic plan for future improvement. This approach upholds the integrity of financial markets, protects investors, and maintains Lithia Motors' credibility. Regulatory justification stems from the Securities Act of 1933 and the Securities Exchange Act of 1934, which mandate truthful and complete disclosures, and the Sarbanes-Oxley Act of 2002, which strengthens corporate governance and financial reporting standards. An incorrect approach that involves prematurely recognizing revenue for future services not yet rendered would violate GAAP principles, specifically the Revenue Recognition Standard, which requires that revenue be earned and realized or realizable. This misrepresentation inflates current earnings and deceives investors about the company's true financial health. Another incorrect approach, such as capitalizing operating expenses that should be expensed immediately, would also distort the income statement and balance sheet, presenting a false picture of profitability and asset value. This violates the matching principle and the definition of an asset under GAAP. Finally, an approach that involves omitting or downplaying negative operational trends in public disclosures, even if not outright false, constitutes a failure of full and fair disclosure, which is a cornerstone of securities regulation. This can mislead investors into making decisions based on incomplete information. Professionals should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance above short-term financial pressures. This involves seeking guidance from legal counsel and accounting experts when in doubt, fostering a culture of transparency within the organization, and understanding that long-term success is built on trust and integrity, not on deceptive financial reporting.